Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to look at a fun indicator called the Money Flow Index. And here we have the MFI, or the Money Flow Index. You can pause and read this on your own. It's actually quite similar to RSI, and it looks a lot like RSI. So let's pull it up. Here's the Money Flow Index. You can think of it. It really just looks like RSI. And I'll tell you how it calculates in a second. But really, let's see. The biggest difference is that the Money Flow Index is like the RSI times volume. Like it takes volume into account, or it's like a volume weighted version of the RSI, right? You have your overbought levels, right, which is above 80. You have your oversold levels, which is below 20. It's going to be the same concept as RSI, where you buy when it comes out of oversold, you sell when it comes out of overbought, and you don't buy as it's entering, right? Because the price, you often get the biggest moves up, overbought, the biggest moves down, oversold. You have your centered line. If you want to use your centered line, around 50, that's fine as well. That would make this a centered oscillator right around 50. But the way it calculates, very simply put, is it takes each session. So we're looking at a daily chart. So it takes each daily candle, and it takes the high, the low, and the close of that candle, and it divides by 3, right? And that gives you, a certain value. It then takes that value, and it multiplies it by the volume, which gives you the raw money flow for the day, right? So the high, low, and close divided by 3 is called typical price. And if that typical price is higher than the day before's typical price, right, then that's a positive money flow. If the typical price is lower than the day before, it's a negative money flow, right? So you get that. It basically just takes the average of it gives you a good average price for the day, multiplies by volume. And if it's, if the average price is more, it adds to this number. If it's less, it subtracts from it. Then it does this 14-day look-back period, right? That's the same with RSI. It's also 14 days, very similar. And it basically looks at the average of the positive money flows and the negative money flows, right, to calculate a number. And then, that's the money flow. Then it takes that money flow and it does a very similar calculation to RSI, where it's like 100 divided by 100 minus 100 divided by 1 plus whatever, right? It's a very complicated formula. I'll show it to you real quick, but it's just the same as RSI, where it does it here, right? 1 blah blah 100, right? You don't really need to know that, right? If you do, go ahead. Like, this is here for you. Pause and read this. So I'm doing this for you, but think about this as just a volume weighted version of RSI, okay? And you have stricter overbought and oversold. So it's kind of interesting. This may work better in your system than RSI because it uses volume, and volume tells you where things matter. It's important for candlestick theory. It's important for everything. I'm a big proponent of using volume. So check out the MFI, the Money Flow Index. Again, indicators, and we go to technicals, and you scroll right down to Money Flow Index, right there, MFI. Okay, Money Flow Index. So that is the Money Flow Index, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads. Oh, by the way, you can use this for divergence as well. Same with RSI. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chads out.